Welcome back to another episode of Borak Bersama Maybank. Today we have a stock idea that may be able to benefit from a potential semiconductor upcycle in the coming months. So here we have me today. We have Jeremy Yap, our oil and gas sector analyst, and I guess now our aerospace and tech analyst as well, joining us on the show. Alright, before we get into why the stock price has been running upwards recently, let's first get into the gist of what the company is about. So Jeremy, could you give us a brief background on what the company does and who do they cater their services to?
All right. In simple terms, SAM actually has two complementary business segments. And the first one will be aerospace, and the second one will be equipment. SAM's aerospace segment specializes in the precision machining of niche aerospace products that are used in the wide body, narrow body, and regional and business aircrafts, and mostly in the scopes of nacelles and engine cases. And for this segment, their end clients are the duopolies, Airbus and Boeing. SAM's equipment segment provides equipment engineering solutions like precision machining, metal sheet fabrication, surface treatment to the semiconductor and data storage industry. In layman terms, they either do components, parts of equipments, or entire equipments for their three main customers, which we will annotate throughout the call as customers X, Y, and Z. Okay, customer X and Y are high quality front-end SPEs, semiconductor production equipments, directly servicing foundries and fabs globally, such as TSMC, Samsung Electronics, Intel, etc. And meanwhile, customer Z is a renowned globally back-end ATE player, and its top-paying customers are Texas Instruments and TSMC as well. SAM is a leader in the Malaysian tech industry with exposure to superb high-quality global semiconductor names and the duopoly of Airbus and Boeing.
Alright, so to basically sum up, the company is involved in both the aerospace and semiconductor sector, and their key clients are Airbus and Boeing within the aerospace division, and as you call it, customer X, Y, and Z, which cater to large industry players like Intel, Samsung Electronics, Texas Instruments, and TSMC within the semicon space. Okay, now that we understand a bit about the business, what are SAM's key reasons for it to be a buy in your books?
Okay, personally, part of the criteria before I choose to initiate a conviction buy on any stock, basically, on a specific stock, needs to have the requirements of, like, firstly, strong management, right? And secondly, where I'm able to envision the back-to-back earnings growth at least for the next 2 to 3 years. And I'm seeing that in SAM. And also, I believe that SAM is a secular growth stock. I think for very good and solid companies like SAM, why is it a buy now? It's extremely unwise to time the market in a sense. Nobody can tell when is the perfect time to position into companies like this, right? It's backed by Temasek, which is Singapore's sovereign wealth fund, has strong front-end semiconductor exposure to customer X and Y, and also supplies to Airbus and Boeing as end clients. Yeah.
All right. Lastly, let's talk catalysts and risks. What are some of the key drivers that can push the stock price to another level? And what are the things that may cause a potential unfavorable re-rating in the future?
Okay. Firstly, end of this month, it will be earnings delivery. And secondly, I think that investors are always trying to time the bottom on when, like, the worst is over in regards to all these two sectors, basically. And so the main catalyst will be earnings, and also when guidance on global news flows of when the WFE, which wafer fabrication equipment upcycle kicks in, SAM will be re-rated significantly. And also with the runway of earnings growth over the next 2 to 3 years, SAM is pretty much my conviction call. I'm not promoting this name as a one-trick pony or one-hit wonder. It's a thesis and a gradual upward re-rating over the next couple of years. Emergence of a new front-end customer would also be a possible re-rating catalyst for the stock. Okay, in every investment thesis, there definitely are risks. And the first risk that I would like to highlight would be another global pandemic, which would affect the entire supply chain in the aviation industry, which would affect the supply chain of Boeing and Airbus. And the second one would be a delay in the WF front-end CapEx cycle spending due to global inventory adjustments. longer than expected global inventory adjustments. And the third will be a loss of any key customers. XYZ would be a derating catalyst.
All right, and that's all the time you have today, folks. You can catch Jeremy's report and many more trade ideas on the all-new Maybank Trade app. Remember, if you do not have a CDS or trading account, you can apply for one online in just 3 minutes via the QR code on the screen now. If you basically need a more human touch, you can also approach our sales representative and they can help you get started on that as well. With that, I'll catch up everyone in the next episode. But until then, this is Najib Hussain signing off.